All right. Hello, evening, everyone. Okay. All right. Now, if you can hear me and are ready to go, type go, go, go. All right. And we'll get going for today's session. Okay. We are ready to go. Thank you very much, Anthony. Hi, Sonny. Hi, Josephine. Hi, Wave Rider. Hi, Pangsin. Okay. If you are with us right now and joining us for the Facebook Live, drop a note, say hi. All right. I'd love to know who's with us. Okay. Thank you very much. Okay, thank you very much. Thank you very much. Now let's go. So, where are we at today and what have we got? So, let's have a look at the market actions right now. So, for those of you who are joining us for the very first time, if you look at the screen scrolling below, right, we will need you to click on the blue color highlighted link on the Facebook Live post, all right, so that you can approve StreamYard for Facebook use. Okay, and when you leave a comment, we will actually be able to know who's leaving the comments on the back end of our screens over here. All right, now, first of all, let me thank you very much. And where are we? Yes, Wave Rider, thank you very much for sharing the live video out. All right, this is what we really hope for all participants who are joining us every week to assist us and help us in doing so. Right now, we are trying to run this as a public education. So we want to highlight and showcase the power of being an option seller, right? How we can keep things really simple and build a simple portfolio around option selling instead of actually spending the money and buying those stocks. All right, now, so our target is a portfolio that pays us 20% per annum and higher. So all our trades that we put up every single week, all right, has the target in mind. Now, so what's our preferred choice of strategy during this public Facebook Live session? All right, our preferred choice of strategy is going to be what we call the portfolio puts. So we are going to be option sellers. So our directives in this Facebook Live sessions is really starting off any trades with selling a put option on a stock that we are happy to be happy and willing owners of. Just instead of buying the stock outright, I rather start off with selling a put options on the same company instead. Now, so effectively think of it as this way. I found a stock. I like the current prices right now of the stock, but instead of actually buying the stock right now and hoping that the stock price will go up so that I can make money and profit from this stock, all right, I'd rather be a seller of the put options, all right, and the benefits are really the fact that even if the stock doesn't move, all right, I'll actually be able to generate cash flow, all right, in terms of doing so. All right, now, so this is an alternative way of, generating we can't really say this profits, but in a certain way it is as well, all right, generating profits from the same stock. Okay, but this is what we call a very income-driven strategy, all right, because every time we sell a put option, it can be repeated, all right, so the profits are more in the form and the like of income over here from the stocks. Okay, all right, now, so let's get going over here. We still have some new users joining us, all right, as we mentioned over here, all right, one of the reasons why we want all of you to click on the link, all right, so that you can approve Facebook use, all right, is really because of this, all right, right now, because on the back end over here, this is what I see, all right, which means, all right, when you leave a comment for me, all right, what I really see right now on my back end, all right, is the fact that I see a Facebook user, all right, which are, I think it's you, which are, all right, okay, which are, all right, can you click on the StreamYard, all right, Facebook link, all right, and then approve Facebook for use, okay? All right, and I think the other one will probably be Sira, all right, and KS. All right, I think it's Richa, Sira, and KS. All right, now if all of you can click on the streamyard.com/Facebook link, all right, and help me approve it, all right, for Facebook use, that'll be awesome. All right, we'll be able to see you leaving the comments after that. Okay, all right, now I'm going to get this session started. And before I do so, I would like to put up the disclaimer as well. All right, I will be discussing live trades that I'm happy to put on in my portfolio that you'll be seeing me execute the trades on. All right, but please be aware that all investments have risk of loss. So please make sure you're fully comfortable with the positions and the trades that I'm taking, all right, and showing all of you and discussing with you about, right, before doing so on your personal and live accounts, okay? All right, thank you very much. Now, so let's get things going over here. So this week, I want to add on to the education a little bit before we move forward. All right, so I just want to give those of you who are new to us, all right, and new to option selling, all right, a diagram form of the strategy that we're doing right now. All right, so the strategies that we're doing right now, as I showcased over here, is called selling the portfolio put options. All right, now, so what we're really doing is this spot over here called X is really where the stock price should be. All right, so this is actually should be labeled over here. Let me put down a label text. All right, so this is where the stock price is, all right, of whichever stock that we're aiming and we're targeting for. All right, so first off, all right, to make sure that this trade will work out as best as possible for us, all right, what we really want, all right, is that for this stock that we are finding over here, right, before we do anything and sell a put option on it, all right, this stock should be relatively undervalued, all right, when it comes to the stock market and the valuations put on the stock price right now. Okay, now the simple reason is, if you start off with a stock price that's already undervalued right now. Okay, so for example, it's already undervalued right now. All right, the objectives of the stock is really for the stock price to actually bounce. Yeah, okay. Now it may take some time for it to bounce, all right, but the downside becomes very limited because you have a great company with great fundamentals, but it's already at what we call rock bottom prices. All right, now, so when it is trading at rock bottom prices, even with a market that is sky high right now, all right, it just hit a new high yesterday. Yeah, right now, even at sky high market conditions right now, if it goes into full on selling mode, right, these stocks have not much room left, right, to be sold into. Right now, so this is the reason why selling portfolio puts over here on these kind of stocks, right, are very defensive in nature. Yeah, right, defensive in nature. For example, over here, just to giving everyone a very simple guideline, I'm going to take it from a Singapore perspective. Right now, if you are looking at a DBS stock right now, all right, everybody knows DBS stock is defensive, is a blue chip. All right, now, if you can get it at the right price, you should be considering buying them. Right now, so the question then is, what's the right price? All right, it's very difficult to pinpoint, right? But if you actually can look at DBS and find DBS at a price of about $8 right now or $9 right now, I think we can decently say that that's pretty undervalued, right, for a banking stock like DBS. Now, so one thing you'll consider doing right now is if you have the capital and you can park the capital for some time, all right, you may actually want to consider buying the stock. Right now, all I'm saying right now is this: instead of buying the stock, because to make money after I buy a stock, right, it needs to go up. All right, but if I choose to sell a put option instead, this is of course assuming that Singapore stock market has options as well. All right, now which currently it doesn't. All right, so I can do the same thing over here in the US market. All right, so if I find a stock that's in similar nature, all right, I expect very little downside. Okay, very little downside. All right, so by selling a put option, yeah, okay, what happens over here is if the stock doesn't go below the put option that I'm selling, all right, the option expires worthless. All right, and whatever I'm getting paid for selling this put option, all right, is all for me. All right, that means I get to keep it. So I'm functioning very much similar to like an insurance company over here. All right, if there's a claim, I pay up. All right, in my case, when I pay up over here, all I do is I take on the obligation to buy the stock. Right, so when I sell a put option in this public session and public portfolio, all right, what I do to make sure that I can do this very, very safely, right, is the fact that I'm selling portfolio put options with full cash. Yeah, all right, with full cash over here. So that means if I'm obligated to own the stock, I'm just going to come up with the capital. I already have it from the beginning. All right, so I'm going to own the stock. That's it. Yeah. All right, and like I said over here, if it is a stock like DBS, all right, instead of buying it here when I already say it's like $8, $9 and it's already cheap, all right, let's say if I sell a put option at $7 instead, all right, if my customer comes to me and forces me to take on the obligation, I actually end up buying DBS at $7 instead of 8 or 9. All right, and beforehand, before I even bought the stock, I already got paid for it. All right, now, so this is very similar, all right, to people who buy property. All right, people who buy property like to own the property. That means they buy it and they like to start renting it out. Right, and many investors actually see this rental income as offsetting the whole cost of the property itself. So somebody is actually paying the ownership of the property, all right, for you. Okay, now so think of it that as similar thing to what we're doing right now in this public session. Okay, now, so that's all I want to say over here. Just a quick segment and bringing updates to what we're doing. So people who are following the session right now won't be feeling so lost. Okay, all right, now, so before I start to take some portfolio actions over here, what I want to do is I want to bring people up to speed. Okay, now, so I will do my usual 5 to 10 minute market updates over here, and then I'll move into the trades and the portfolio management. Now, so first up. Okay, now, if all of you, man, hang on for a minute. Yes, I wanted to load the SPY. All right, now, so first up over here, everyone. Now, we have hit a new all-time high over here on the SPY yesterday. All right, I am actually leaning a little bit now on the bullish side, but I am actually going to wait for confirmation in today's market, right, to actually declare that I'm a little bit more bullish right now than bearish. Now, if all of you have seen my commentaries recently, all right, I've always said this: unless and if the market makes a new high, all right, the mode previously, all right, should be on the bear side. That means we should be selling any rallies that is happening right now. Okay, but what we're seeing right now is the market did hit a new high yesterday. Okay, but there's a caveat to it. Now, the caveat to it over here is I'm going to zoom in for all of you. I hope I can do this. Yes. All right, now, and the caveat over here is it did not close, all right, above the previous high. All right, so the previous high over here was 393.84. All right, and yesterday, all right, the SPY over here actually closed at 390. Yes, it actually closed at 393.53. All right, so it actually closed below the last high that the market made. All right, now, so this would mean that we need a confirmation candle, right, in today's market. That means today, all right, if the whole market wants to change the whole mood and the whole tone of what's going on right now, right, it will need to close above, all right, the all-time high. Yeah, all right. Now, that's what I want to see over here before I really declare myself, all right, as more bullish in the short term over here. All right. Now, apart from that over here, we can still possibly see a potential divergence. All right. As you can see over here, the last time we had the high, all right, the stochastics are still at a higher level, all right, than where the stochastics currently is. Okay, now, so if the market starts to turn from here, that means if it turns lower from here today, right, we may actually start to see, right, a sell off a resistance level. All right, now, I don't really think that's very, very likely. All right, but the markets have been very volatile recently. Yeah, okay, all right, so it's really, really hard to say. There are, of course, factors in place. All right, but one of the reasons why I do say that it's very unlikely, okay, one of the reasons why I say it's unlikely, all right, is because of this. Right, pardon my lag over here on the computer, right? Right, it's because of this, right? So the MACD over here after yesterday's or this week's rally actually, right, of the last 3 days, right, has already cut back above. So for now, right, the short-term momentum over here is on the upside. All right, it is not a lot of strength behind it, all right, but it is still the momentum after all, right? And my students have always heard me tell them this as well, right, that we should not go short against the indicators. That means, all right, if the indicators are following the market upwards right now, right, and the angles and the slope of the indicators are at a 45-degree angle or even sharper than that, right, that means that there's still room to go on the upside. All right, so what you really want to do is you want to only take the opposite direction, right, when you see that it's starting to flatten out over here, right? And one other thing that has it against the current up move over here, right, is the fact that there is a clear and obvious lack of participation. Right, okay, now, so over the last few days when the market was going up, right, what we're seeing right now, right, is actually the volumes going down. Okay, now, so this week, the market is simply buoyed by, the stimulus over here being sent around the House and the Senate, being approved, right? And then finally, all right, it's being pushed out kind of news over here, right? But this can also lead to the fact that, buy on rumors, sell on news, right? We haven't seen that, but that's definitely clearly the case. Now, and one other thing that's putting pressures on the markets, right, it's right? It's of course still the bonds, everyone. All right, look what's happening. Look at where the bonds is today again. right? The bonds is hitting a new low. All right, so markets is hitting a new high, bonds hitting a new low, which means interest rates are hitting a short-term high over here, right? And this doesn't signal well, right? So we did say that, high interest rates favor the financial stocks, but it's so much of goodness, right? It's going to only work to a certain extent than to focus on the goodness over here, because high interest rate leads to inflation worries, stagflation worries, right? And this can cause the market to turn on. All right, hi Jonah. Yeah, okay, all right. Now, so what we're really seeing right now is this caution and these worries hitting the markets. Yeah. Okay, now, so interest rates are rising as bond prices come down. So it is going to be really, really soon, right, before it starts to put pressure on the financial sector. The financials is still up, right? But it looks like it can turn around anytime over here. And if it does, all right, the market's lower, right? And we said, all right, the poster boy of the market right now, all right, the poster boy of the market right now is actually not, all right, I have no vested interest over here, all right, but Tesla struggling, all right, Tesla has been struggling to reclaim, all right, the $700 level. Where's my Tesla? Load my charts, everyone. The information is up there, but the chart is not reflecting Tesla. How amazing. It says Tesla, but the prices, this is definitely not Tesla's prices. What's wrong with TD Ameritrade? Hello, everyone. All right, am I back? All right, if I'm back over here, could you leave a comment to let me know? I seem to have lost connection earlier. All right, let me know if I'm back, everyone. All right, thank you very much, Sebastian. All right, I seem to have lost my internet connection earlier. All right, now, so we're back. Now, so as I said earlier, the market right now is none other than Tesla. I have absolutely no vested interest, but Tesla is going to be, how do we say this? It's going to be pulling the markets on its strings. Now, so in some of my previous posts and analysis over here, right, I expected Tesla to break 600, and it did do so, right, for the best of 2 days, right, and then we had that bounce off the 600 level, right. But the only problem right now is it seems to struggle, right. All right, we challenged it 3 days ago. All right, I think I'm good again. All right, apologies for the connection issues today. All right, now, so as I said over here, it's hitting the resistance 3 days ago at about $692, $200 level. All right, and then today, yesterday and today, it seems like it's coming off from those levels. All right, so this is definitely a concern I have. Let me zoom in on it. All right, there we go. Right now, so this is definitely a concern that I have with the markets, because if it turns down from here, right, so if it comes off from here over here, what's going to happen is it may start to swiftly fall back towards the 600 level, right? And if it falls back towards the 600 level, right, it's going to drag the market down along with it. Right, so it'll start to drag the Nasdaq index down, right? And Nasdaq index, once it's down, may actually drag the big tech down, right? So if the big tech together with Tesla gets into the red zone, right, and with bonds right now pushing to all-time low prices, right, you may start to turn the financials as well on the markets. And once we have those severe correlations of all indexes, all sectors that leads the market on a certain direction, right, we may actually start to see, all right, a more severe move in the entire market itself. All right, let me see if I can show all of you over here what I want to map out, right, before I go into the portfolio actions. All right, hang on, everyone. All right, there we go. Right, so this is where I'm trying to tell everyone over here that I'm just using the TD Ameritrade platform, and it has a function where it allows us to do a market watch, right? And what we're seeing right now is that we have about 320 advances versus 180 decliners over here, right? So it's pretty much about 2/3 on the upside and 1/3 on the downside for today. All right, so this is the S&P 500 index of about 500 companies over here. All right, and we have about 66% of the stocks in the entire index that is on the upside of today. That means they're positive. All right, and then 1/3 is on the downside. But can you see, despite just 1/3 of the entire index going on the downside, we are actually down right now. We're actually in the red. All right, now, can you imagine what happens over here if we have all 500 stocks turning red for the day? Yeah, all right, now, so it can actually turn around very quickly in this marketplace. All right, so we have this company called AM. This is a new company. I haven't seen it in a while. Yeah, all right, now it's down by 4.5% today. All right, so this company in the index is down by 4.5% today. All right, we have CDNS over here, which is down by 3%. Right, and CRM, Salesforce, right, which is down by 3% as well. Right, so we have some big techs over here, all right, that's pushing the market lower. Right, so it looks like tech is reversing. All right, we have AD, Autodesk, all right, which is also down. All right, let's see what AM is about. Seems like an oil company. Yeah, all right, seems like an oil company over here. All right, it's down. Not a big down over here, but in terms of percentage terms, it's quite big. All right, now, so that's really what I want to share over here in terms of the market updates. So things to pay attention to, all right, the bonds, right, the S&P 500, the volume, right, whether it's going to reclaim and close above the high for today. Yeah, all right, so above the all-time high. All right, if it's going to close above it, we're going to have a short-term bullish move over here. All right, and followed by the MACD, and we want to spot a divergence on the stochastics. All right, if you're going to go on a short. So for now, everything seems fine. So let's go to our portfolios over here. All right, now, so going to our portfolio, we have a position that is expiring today. All right, and that is Verizon Wireless. All right, so let's go have a look at this position. All right, it was all good until yesterday. So, oh well. Oh, we're good today. We're good. All right, so let me first show all of you the positions. We have a $56 put option that is expiring on the 12th of March. All right, we collected 63 cents for that on 19th of Feb. All right, so today is expiry day. All right, so we're going to manage this position right now. All right, so we should be able to lock in for a profit over here, 56. All right, there we go. We can close it for 20 cents right now. The bid and ask is 18.20, so I'm wasting no time. I'm going to pay 20 cents and close this trade right now. All right, so we're going to close it off for 20 cents. All right, so that brings us to another profitable trade over here. All right, of course, it could be better, but I'm not going to complain after all. All right, so that's $129 confirmed cash flow with the market closing, with the closing of this trade today. All right, that's going to elevate 16,800 for my portfolio requirements. All right, so that's another winning trade for our portfolio right here. All right, now So turning around over here, what I'm going to do is I'm going to reinstate this position. All right, so it expires today. All right, I'm going to close it. I got a profit from it, and I'm going to reinstate the position. All right, so reinstating basically means, all right, I'm going to go ahead right now, all right, and sell another new put option on the same stock. All right, so I'm going to sell another put option on this same stock over here. All right, where are we? All right, so let's go to 16 April, 1 month from now. All right, so let's go to 16 April, 1 month from now. We're going to target the $55 put option. All right, I'm going to aim to sell this for $1.10 today. All right, $55 put options for $1.10 today. All right, so let me go ahead and fire off the trade right now. Let's see if we can get it done. All right, now please remember, for every one option contract, right, for this naked put of $55 strike over here, right, you will need to be ready to buy 100 shares of Verizon at $55 a share. Right, so the deposit requirements, all right, if it's going to be cash secured, it's going to be $5,500 per contract over here. All right, $5,500 per option contract. Okay, for this Verizon wireless trade. All right, so I'm still going to go ahead with my typical 3 contract trade on my 100K portfolio over here that we're doing it together with. All right, there we go, everyone. All right, I fired off the trade over here at 109. Yeah, okay, all right, and it's already done. All right, so I'm just going to pull it over for all of you to verify. All right, so right now, all right, on the clock, okay, at 59 seconds. Yeah, all right, I sold the VZ April 16, $55 put. I've sold 3 contracts over here at 109. All right, so I got it done at 109 over here. All right, so this is reopened right now. So I'm going to place this, all right, inside our portfolio. All right, so I close one for a profit. I reopen it again. This showcase why, you know, I do like the idea of generating cash flows instead of actually the actual stock ownership. All right, over here, because, you know, even though I've not made money because the stock probably didn't even go up from 19th of Feb, all right, I actually made money selling options. All right, if I owned the stock, I probably made nothing. All right, but over here, of course, I made some money. Right now, so this is $1.10 over here. All right, now I'm going to delete this. So this will pay me $330 for a 3 option contract trade. Yeah. All right, now what's the margin requirements? Let's go ahead and do so. All right, I need $16,500, all right, to open this trade. Okay, now, so making sure that this is cash secured over here, all right, it will occupy $16,500 on my portfolio requirements. Now I'm ready to highlight this green. Another winning trade. All right, now, so let's go ahead and check our Kellogg's trade as well. All right, Kellogg's have had some good up runs recently. All right, and let's see if we can do something on this trade. 16th of April, 60 puts. Nice profits over here. All right, I'm going to take some profits off the table as well, everyone. Yeah, all right, now. So Kellogg's have Kellogg's have ran up a little bit over here in recent weeks. All right, so what I'm going to do over here is I have the 60 puts for 16th of April. All right, it is now going for 169, 190. All right, 169, 190. All right, so what I'm going to do is I'm going to place an order. All right, I'm going to place an order to, I collected $3 about a month ago. No, I'm going to hang on for another week. All right, I'm going to hang on for another week because I want to pocket at least half the premiums, because like it's halfway down the time period of the trade. We took on a 2 month trade. Right now we are in about a month. So I want to pocket at least half the premiums if I'm going to close this trade. Right now, next up, we have CPB, all right, which expires on 19th of March. That's next Friday, all right? It just recently has its earnings, all right? So I think it was pretty decent, so we can close off the trade today. All right, so I'm going to close off this trade right now on the earnings bump. All right, so I think this is good. All right, so we have a $44 put option over here. So to free up the margins, all right, I'm actually going to pay 5 cents. All right, as you can see, the last done price, all right, is actually 5 cents. All right, the bid is 0, the ask is 10 cents. So by submitting 5 cents, you should be able to get it close. All right, so we're going to close this trade and this position over here for 5 cents. All right, because trying to tie up that whole deposit over here for just 5 cents and with a week left, right, doesn't make a lot of justice over here. All right, so I rather free off the margins, right, from my accounts. All right, now that's done. There's another winning trade over here that we are logging out. Okay, all right, and let's look at CAH. All right, another stock that has a decent run up. Okay. All right, CAH is up almost 2% today. Let's see what we've got for our 16th of April, $50 put strike. 16th of April, $50 put strike, 45. We should be able to close it for 45 today. All right, that's pretty good. All right, I'm going to close it out. All right, so as all of you can see, the 16th of April, $50 put strike. It is now a bid of 25 and an ask of 55. Right, the last done is 44. Right, so I'm going to try to close this today for 40 cents to 45 cents. All right, so I'm going to pay about 40 cents to 45 cents to get this closed off today. All right, now, so I'm just going to put it and record it as 45 cents for the closing. Yeah, so those of you who have the trade, all right, can go ahead and work this order right now. You can first try 40, all right, okay, and if it doesn't fill, you can try 45 after that. All right, now we opened this trade on the 26th of Feb. So right now we're slightly under a month, all right, but as you can see, all right, we've pocketed way over half the premiums over here. All right, we've pocketed almost, 4/5 of the entire premiums available. All right, so it makes sense to close this and free up the margins as well. All right, now, so I'm going to free up another margin. All right, that's good. All right, my margins are freeing up right now. All right, so that will pay us another $375 confirmed cash flow over here. All right, the VIX positions as a hedge, so I will not do anything to it. All right, lastly, our EXC position, which I have only took on for 2 weeks now. All right, it's done pretty well. All right, let's see what we've got. 16th of April, 38 puts. Close it up, close it up. I'm closing it up. All right, now 16th of April, 38 puts, everyone. All right, I can close it by paying 25 cents today. All right, 38 puts, 20, 30. So 25 cents, we can close it off. All right, so I'm going to close this off for 25 cents today. We've pocketed really fat premiums in just 2 weeks. All right, so this is a good trade over here. $210 in the bag. Right, we had very, very choppy markets over the last week or so, right? But portfolio is doing well. Right, nice, nice. My portfolio is freeing up. Right. Okay, now, so last one over here, the Verizon, I've just put it back today. All right, now, so the EXC trade was only for 1 week. All right, so this was a very, very good trade in just 1 week. Now, so I freed up quite a bit of margins from my portfolio over here. Am I going to add any new positions into my portfolio right now? All right, and let's see if I've still got what I wanted over here. Yes, I do. All right, so I'm going to go ahead and do this over here. Let's see if it works. It works. All right, let me work out the ROIs on this trade. All right, if the ROI fired off. markets, and also in line with what I've said just now to all of you. Going back to this diagram over here, what I want a stock, right, which is now trading at a decently undervalued valuations. Right, first, the stock should be great, because buying a great stock, you know that the valuations will up very fast, right? But it will go up and it will hold its value, right? So right now, if it's severely undervalued, that means that the pressure on the downside is much lesser, right? And with a market that's so high right now, okay, I want to have these kind of. If the market comes down, we should actually expect these undervalued stocks to benefit from that. Right, and that's one of the reasons why Kellogg's have been going up. Most of our trades on the defensive stocks like Kroger's and were all taken under the same basis over here. Right, so today I'm going to go with CVS. All right, so CVS is in the pharmaceutical sector. All right, so it is one of the reasons why I'm doing this right now is because the company sports only a PE valuation of 13 right now. So many of you who are trading growth stocks, right, you will argue the fact that, hey, Terence, you should never look at PE ratio. Not looking at growth stocks, right? When I'm selling put options, I'm not interested in growth stocks. I'm interested in stocks that will pay me, right? That means stocks that will hold its prices so that my options, right, will go to expiry, all right, expire at very undervalued valuations, right? And CVS fits the bill, a great company model, right? In the healthcare industry, it's relatively safe, cash flow driven, right? It pays dividends, right? It trades at all right, risky money should flow into safe sector money. All right, so this is one of the reasons why I like this trade. So I'm targeting the 70 strike for 16th of April. All right, so the 70 strike put option for 16th of April, and I'm on the CVS 70 strike put option, right, for a month. Now, please note as well, because this strike, right, is going to be at $70. I believe I'm right. Okay, now, so this strike is going to be at $70 over here. All right, so what I really want to do is I want to the cost of the trade is actually going to be much higher. All right. Okay, I'm going to do something over here. Bear with me, everyone. All right, test, everyone. Am I back? What from my Wi-Fi? Oh my goodness. All right, am I back, everyone? Can help me out over here by typing back again. Yes, I'm back. Thank you very much. All right, thank you, Anthony. All right, now, so I'm gonna go with the CVS. Prices have moved. All right, now let's see if I can still get what I want to my platform. How wonderful! Thank you, Bang Sin. All right, I'm just trying to get my platform's prices to load up. Right now, so once again, I'm targeting CVS. Data is dates. I'm just going to use my mobile right now to check the prices of. All right, so the premiums right now in the markets are 115, 117. All right, okay, 115, 117. All right, so I'm going to be based on that, right? So it definitely seems like M1 is having some connection issues today. All right, I'm connected. Okay, I'm back. Okay. Very slow. Okay, now, so I'm just going to bite this. All right, I'm just going to bite this at 115, everyone. All right, so CVS $70 put option for 16th of April. On. And I'm going to confirm it by leaving a comment in this Facebook live session after it is over. Okay. All right. Now, so I'm just going to go ahead and load it into the portfolio. All right. So CVS portfolio puts for 16th of April. That's 70 strike. Okay. We're doing it today. All right. And I'm pocketing 115. So for this is going to set me back $21,000, right, for 300 shares of CVS, right? $21,000 for 300 shares of CVS, okay? All right, here we go, 70, 70, 70. So three contracts. One. All right, I'm back over here. Sorry, everyone. All right, thanks for staying on. All right, yes, Karen, I was cut off again. All right, terrible. All right, okay, now, so I'm back. So hopefully all of you will be able to see me again on the screen. So let me wrap things up. Okay, all right, so let me wrap things up over here. You have to check with M1 on that, Karen. All right, now, so trade number 42, CVS. All right, 3 option contracts for the naked puts over here on CVS, 16th of April expiry, $70 per option, 115. Okay, 115. Okay, all right, so we got it done at 115 over here. So that'll pay me $345. Now, so just to answer Tanya's question, I think Tanya is asking Terence, why do you repeat column J, and column L? Right? I believe that's what Tanya is asking. Yeah, or is it K and O? K and O. Okay. All right. Now, basically, I'm repeating because this K over here, all right, was meant to just calculate and showcase to all of you when I open the trade. Okay, that means like over here, all right, when I'm collecting 85 cents, right, how much cash flow am I getting? All right, and then over here, all it's doing over here is taking into account how much did I close the trade for. Yeah, okay, you can ignore it, all right, Tanya. All right, it's just the way I'm recording it on my Excel. All right, I can actually do away with that column as well. That's fine. Yeah. All right, now, so let's calculate the ROI on the CVS trade. So let's do this. Equals to 115 divided by $70, which is the full cash that I'm putting up. So that's 1.64 over here. All right, 1.64% return for about, let's do this. 1, 2, 3, 4, 5. 5 weeks trade over here. All right, this is a 5 weeks option. All right, so all I need to do is to divide this by 5 and then multiply it by 52 to analyze this. All right, so this trade brings me in at 17.1%, a little bit short of the 20% target, right? But still a good trade because of the undervalued nature. Yeah, all right, now, so that brings the trade in at about 17% ROI on an annualized format. Yeah. Okay, all right, so let's go ahead and answer some questions. I'll pick up 2 questions over here before I end off today's session, all right? So let's go to Pang Sin's question, all right? How do I decide which date to buy and how to calculate the profits that we earn from each trade? Now, so first up, if you look at this CVS trade that I've just talked about, right, the premiums that I'm collecting from the beginning, right, it's going to be $1.15, right, for doing this trade and getting the order filled. So if I got filled at $1.15, all right, and I'm putting up a deposit of $70 to actually buy the share in full, so the ROI of this trade as an option seller is going to be how much you get, all right, how much you get, which is $1.15, right, divided by how much I'm putting up as an investment for the trade, right, which is which is $70, right, which is $70. Yeah, okay. All right, now I've just got my order filled, so I just wanted to show it to everyone and verify it. All right, CVS over here, all right, CVS $70 put option for 16th of April. All right, I got filled at 116. All right, slightly better. I got filled at 116 over here for 3 option contracts. All right, so 1.16. All right, slightly better. Yeah, okay, now, so Pang Sin, all right, so that's how I'll calculate my ROI. So that's how I got 1.66% over here on my screen, yeah? All right, so this is how I got the 1.66% over here, yeah? Okay, all right, now, so how do I decide which option expiry am I looking for? All right, it's really a little bit of going with what you're comfortable with. Yeah, okay, because right now I do expect the market to come off with another correction, right? So now we are on the crux of things. So as I said earlier, markets may continue to push, markets may turn around, all right? So this will all happen in the next 1 month, all right? And the thing is this, if markets turn around, like I said earlier, defensive stocks should enjoy the bounce, right? So if my defensive trade in CVS gets a bounce, right, in the next 1 month, right, this premiums will actually shrink very quickly. Yeah, okay, all right. So I'll be able to wrap this trade up very, very soon, right now. But if it doesn't and the market continues to edge, yeah, all right, I don't expect this stock to go down by a lot very quickly as well, right? So, I'm also happy to actually see this trade expire worthless, right? So this is one of the reasons how I decide on a month over here, right? Because if it does go further down, right, the next trade that I take on CVS may actually go longer, right? It's a little bit give and take, what you're comfortable with. So for this trade, I'm happy with a month, so I'm just going with a month over here. Yeah, all right. If the market was much lower, right? So when the markets come crashing down, all right, it's going to bring up volatility in the markets. So when markets volatility goes up, all right, option premiums become more expensive, right? So when I have a condition where the options premiums are actually more expensive, right, I'll be more likely to sell a longer expiry. All right. So right now I prefer shorter term expiry towards a longer term expiry. Okay, Bang Sin, I hope that answers your question over here. Right, anyone else? I can take one last question before we end off if anybody else have a question for me. Right, so going back to the portfolio right now, my exposure is at $63,600. Right, and once again, this is a $100,000 portfolio. Right, so right now the portfolio has 300 shares of Nokia, right, which we are assigned and we're still holding off right now. Right, we have trades in Kellogg's, Verizon, and CVS. All right, okay, and a portfolio hedge in terms of the VIX over here. All right, welcome, Bang Sin. All right, Isaac. Okay, Facebook user. I have no idea who Facebook user is. Let me try to verify it, and then I will address it accordingly. All right, Sira. All right, so Sira is asking, how about Nike tonight? All right, how about Nike tonight? All right, now, let's go. Nike right now. So let's go. Okay, one simple reason of why I will not put Nike on a portfolio position over here is very simply, all right, Nike isn't a growth company anymore. So Nike is not your Tesla. Nike is not your Palantir. All right, Nike is not your CrowdStrike. Right, but Nike is going for 78 PE ratio. All right, so if this company is not growing, all right, this company's earnings is expected to be stable. Yeah, all right. Now, why would I want to buy a company when it's trading at 78 times the earnings? Because looking at the pandemic right now, looking at things going forward, right, looking at the market conditions right now, right, the question is, right, do you think that Nike's earnings, right, is going to shoot up by 78, all right, 78 times or even twofolds, threefolds, right, in the next 1 year from now? Right, if it isn't, right, and the markets start to turn around, right, this stock price is going to come back into normal valuations very, very quickly, right? Because you really see Nike as a mature growth company, right? Even if you want to say it as a growth company, you would see it as a very mature growth company, right? So mature growth companies should not be going for 78 PE ratios, right? That's severely overpriced and severely overvalued right now. Why do I say this? Because if you look at Microsoft right now, right, even Microsoft is trading at lower PE ratios. Microsoft is at 34 times PE ratio. All right, so if you want to own Nike, all right, it will really tell you that owning Microsoft seems safer than owning Nikes. Yeah. Okay. All right. Now, Yufeng over here. So Yufeng's question. So Sarah, I hope I answered your question over here. All right. So Yufeng's question over here is, Terence, do you roll down the stock prices if it goes below the strike, or I take the assignment? For this portfolio, right? For this portfolio, because we're doing it with the publics over here, right? We are gonna take assignment. All right, now, so for my students in our communities over here, we have our own steps, right, in terms of how we manage a trade that gets into trouble, right, which I will not discuss over here because it involves knowing the knowledge before you do so. All right, so if any of you would like to embark on your journey to becoming an option seller, right, send my team, all right, an email on finding out, our next upcoming mentorship programs, all right, where you can get yourselves into. All right. So what's the difference? All right, that you can be expecting. Right, you can be expecting us doing similar things to what I've shared today in this public session. Right, but the capital requirements of each trade that we take out, right, is going to be like at 1/10, right, of what we're talking about right now. So if I've got to put up $7,000 for one option on CVS today, all right, doing it within our community, all right, would take up less than $700, all right, doing the same, almost exactly the same trade over here. Yeah. Okay. So that's the difference in terms of how we run our programs over here, right? We do the same thing for much, much less, right? And with the same amount of risk. Yeah. All right. Now, so that's just something over here based on the question that came up. So email my team over here if you do have interest. Yeah. All right. Now, so Jeffrey. All right. Welcome, Jeffrey. Yes, we have our mentorship program tomorrow. All right. So I'll see you tomorrow, Jeffrey. All right. See you tomorrow. All right. One last question over here, Stefan. All right. eToro. eToro doesn't have options. Right. And eToro is still not an exchange traded brokerage. Right. So you have to be very, very wary of that. Right. And TD Ameritrade is really as cheap as you get right now. All right. So it's $1 for an option contract. No, it's 70 cents. It's no longer $1. Yeah. All right. It's 70 cents. Yes, it's 70 cents all in after GST. Yeah, okay, so it's 70 cents all in. All right, so it's as low as you get when it comes to options over here. So it's pretty decent. All right, eToro doesn't have options over here. Yeah. Okay, welcome, Yufeng. All right, so Don Quell over here. All right, so question, why don't I sell call options on Nokia? All right, I'll take this last question and then we'll call it for an end today. All right. Simple, Don Quell. All right, I had to take delivery of Nokia stocks I took delivery of Nokia stocks at $5. All right, Don Kel. All right, okay. And after selling one call option over here, all right, the call option and put options, right, my break-even price on Nokia right now is about $4.50. All right, my break-even price on Nokia shares right now is about $4.50. All right, so if I sell a call option, realistically, I would like to sell a $4.50 call option. Right now, and a $4.50 call option in the next 1 month, all right, will only pay me about 20 cents. All right, will only pay me about 20 cents. So, let me have a look. It's brought to my attention. It's brought to my interest. Oh, what the heck? Let's do this. I'm going to squeeze out some income over here. All right, it's a short trade. There's some premiums to it. Let's take it. All right, I'm going to sell the 450 calls against my Nokia shares for 8 cents over here. All right, it's paying 8 cents for just next Friday. I'm going to take it. All right, I'm going to take it. There seems to be some high amount of volatility on Nokia stocks, possibly because people are expecting some move over here. All right, so I'm going to take the 8 cents. All right, so Nokia. All right, so let's sell 8 cents. All right, 450 call options if you own the stock. All right, so if you own the stock, sell a 450 call option for 19th of March, right, for 8 cents over here. Yeah. All right, so you've got it. I've done it. All right, Don Quell. All right, thanks for bringing it up to my attention. I wasn't looking at it actually. All right, so let's go ahead and add that trade in. All right, so 3 call options over here for 19th of March. All right, 450 strike. We did it today at 13th of March, right? And we got 8 cents. All right, so that'll put $24 for 3 option contracts over here, right, on the stock ownership that I have currently, right? And if it expires worthless, all right, that's going to help bring down my break-even price on this stock. All right, Don Cal, thank you very much. So I've done the trade. Okay, so we are adding the $4.50 call options on our Nokia ownership. All right, everyone, that's all for tonight's session over here. All right, once again, my apologies for the breakups on the internet connections in and out of the session. Thank you for staying with me. And for those of you who are new with us, if you would like to embark on your journey and join one of our option sellers mentorship programs, where you actually get to trade live with me, right, with the strategies that are taught to you. Right now, send an email to my team at b@impossibleinvestors.com, right, and they will furnish you with more details of the different mentorship programs that we have available. Yeah. Right now, thank you very much, and I'll see all of you once again next Friday. All right, for our next portfolio building session with Terence over here. If you could do me a favor before you end off and leave this session, click on the little share button at the bottom of your Facebook video feed over here. Right, that would help us because it will allow us to reach more people, right, with our weekly segments and show people how they can use option selling as a very powerful strategy, right, to create more incomes from their investments. Right, this is Terence Tan, the Impossible Investor, signing off for this week's session. I'll see you next Friday, everyone. Bye-bye. For those of you who are coming on to the mentorship, I'll see you tomorrow. Right, we have a full day tomorrow. Bye-bye, everyone.